Good morning, everybody, and welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It's May 12th. Let's get going with some charts. Here's what we have. Mortgage-backed securities opened pretty low yesterday. You can see that, and you're probably thinking, man, what the heck happened yesterday? Well, there wasn't really any kind of major news. We had a bond rollover or a coupon rollover. If you're not familiar with what that is, coupon rollover is kind of like when, let's say you own a stock, you have one stock, it's worth $100 and they split the stock. So now after they split it, you own two stocks worth $50. Really, right? You know, six one way, half a dozen the other. Coupon rollover is kind of the same thing. So currently we're trading at about $102.53. Our support's coming in below right around $102.50. And our resistance is above us at about $102.95. So we have a pretty wide trading range here. And as you can see, we're still in this upward trading channel, which is good news for bonds, but I don't know if we're going to maintain that for very much longer. I think, anyway, we'll get to what I think here in a second. Unemployment and jobless claims came out, really not any big news for bonds. Import prices, same thing, yawn. And as far as the news goes, we really should keep an eye on jobless claims though. The jobless claims came in a little bit higher than expected and really kind of outside of the spec that the economists would really like to see. So everybody's going to be keeping a close eye on that, so should we. As far as to quantify where we're at, Freddie Mac came out, reported that the average rate was 3.61 at 0.6 points for April. We're currently trading about 13 cents better than that, so if you do the math, our result is the average rate for a consumer would be maybe around 3.61 at about a half a point cost. So that's a scoop. As far as the outlook, here is our forecast. It's kind of a mix between the analysts, between bullish and neutral. Some analysts are thinking we're going to go bullish in the short term, but there's really not a lot of news for that. As far as the long term goes, overall outlook is still pretty neutral from both analyst eyes. So here's what I'm going to say. I'm calling for flat trading. I think we're going to trade between $102.40 and $102.80. But you know what? Let's open up the lines. What do you think? What do you think? Where do you think bonds are going to go? Do you think they're going to get better? Do you think they're going to get worse, and why? So we'd love to hear your comments below. And before you go, please don't forget to like this video. Everything likes to be liked. So does this video. Hit that like button, doesn't hurt anything. Like I said, love to hear from you guys. Leave your comments below and love to hear your predictions and why. If it's your first time on the page, you can subscribe at the top left. And if none of this makes sense, if you're a person that's getting a mortgage and you're like, man, how do these bonds, how do these charts, how do they help me as a consumer, and how do I really apply this to my situation? At the top right, there's a link. Follow that, it'll take you to Mortgage Bonds 101, give you kind of a fundamentals on how this stuff works. Anyway, that's it for this week. We'll see you next week and would love to hear from you guys. Take care, bye-bye.